From the Federal Reserve Bank moves on rates to the supply and demand for crude oil, in our JLN Sweet 16 series, we spoke with industry executives who gave us their top economic trends to watch for in 2016.
It's highly likely that the Fed will hike, and the Fed has not hiked for 10 years. There are a lot of traders in the markets right now who have never even seen the Fed hike. So how the markets react to that will be an interesting question.
Everybody's got to remember, when the Fed moves, there's a borrowing cost associated with everything, not just money. So there's borrowing costs associated with commodity prices, with energy prices, with everything else in the world.
And that'll open up a lot of opportunity for players like ourselves to manage people's risk in terms of their best execution, reducing their slippage, whether that be on an outright exposure or execution level or on a relative value execution level as well.
What we really see as a driver in 2016 is global energy prices. We've seen a significant collapse over the last 12 months in 2015, and quite frankly, if you read bank analyst reports, it's unclear whether the next $20 move is down or up from where we are right now. It's being both driven by supply and demand, but it's also driven by what's happening in China. Macro slowdown and the story of commodities in general has really pushed demand down, with Iraq production coming online potentially in 2017. So a lot of macro influences in the energies market, which we think will bring a lot of volatility and a lot of need for risk management tools in 2016.
Changes in regulation, changes in the way that markets function, and the fact that the Fed has not hiked for 10 years will, as the Fed starts to hike, lead to significant pockets of illiquidity in fixed income markets, will be coupled with lots of hand-wringing in Washington and finger pointing. And it's my belief that a lot of this is really just the result of some of the changes in regulation that are meant to deleverage the system, but actually will result in greater volatility.